Palantir Technologies stock has experienced a remarkable surge of more than 119% throughout this year, a rally that has been fueled mainly by rapid expansion tied to its artificial intelligence platform and an impressive stream of large-scale government agreements. That early excitement around artificial intelligence eventually softened as concerns grew about whether the broader enthusiasm for advanced algorithms might be creating a bubble. Those fears became more apparent during the month of November when the stock declined by 12.6%. The company now sits in a curious place where investors see both extraordinary long-term promise and considerable risk, creating an emotional tug-of-war between bullish optimism and bearish caution. On tip ranks, Palantir Technologies holds a consensus rating of hold, an outcome shaped by 3 buy ratings, 11 hold ratings, and 2 sell ratings. The average analyst price target sits at $187.87, signaling a possible upside of roughly 13.3% from the current share price. Transitioning from the overall sentiment to the arguments behind each perspective, the bullish outlook focuses heavily on Palantir's revenue momentum and the rapid adoption of its artificial intelligence platform. The company has seen revenue expand by more than 39% on a year-over-year basis, a rate of growth that places it among the faster-growing enterprise software firms. Palantir recently crossed the threshold of $1 billion in quarterly revenue, a symbolic marker that shows both maturity and accelerating commercial relevance. Its artificial intelligence platform has been embraced across the government and private sector, opening the door to entirely new categories of customers while also deepening existing relationships. Those new clients bring in high-margin recurring revenue, which strengthens the company's financial consistency and sets the stage for smoother performance as markets evolve. That development leads naturally into Palantir's role as a defense and national security heavyweight. For many years, the company has been deeply embedded within the operations of military branches and intelligence agencies, providing advanced analytics and artificial intelligence tools that help inform strategic decisions. Government agencies have continued to renew and expand their agreements with Palantir, demonstrating both trust and reliance on the company's technology. At the same time, the commercial world has begun pivoting toward artificial intelligence in a way that significantly widens Palantir's opportunity set. Industries such as healthcare, manufacturing, and finance have increasingly incorporated sophisticated software to streamline operations, spot inefficiencies, and make more informed decisions. With artificial intelligence rapidly becoming a necessity rather than a luxury, Palantir's broadening commercial adoption strengthens the foundation beneath its long-term strategy. This naturally leads into a deeper discussion about financial stability and growth potential. Palantir continues to hold significant cash reserves, giving it the flexibility to expand research, pursue partnerships, and safeguard against market volatility. The company also raised its revenue outlook for the year 2025 by 45% on a year-over-year basis, a move that underscores confidence in its internal trajectory. Many analysts believe that advanced artificial intelligence analytics and next-generation software solutions will play an increasingly important role in corporate and government operations, creating a powerful tailwind for Palantir's future revenue. That long-term optimism offers reassurance even as the stock trades at elevated levels, making Palantir one of the more complex and fascinating companies in the modern technology landscape. However, the transition from optimism to caution begins with valuation. Palantir trades at a price-to-earnings ratio of 387 times, a staggering figure that signals the market is already pricing in exceptional growth. When a stock is valued that highly, even small deviations from expected performance can lead to large declines. If revenue expansion slows, if competitive pressures intensify, or if economic conditions tighten, Palantir investors may experience sharp volatility. That valuation risk forms the backbone of the bear case and provides an essential counterweight to the company's long-term potential. Competition presents another significant challenge. The artificial intelligence and data analytics landscape is evolving at breakneck speed, attracting both large technology conglomerates and fast-moving startups. As artificial intelligence tools become cheaper to deploy, and as language models grow increasingly powerful, barriers to entry shrink. Competitors may offer lower pricing, more specialized tools, or innovative approaches that challenge Palantir's share of the market. For a company working at the highest levels of government and enterprise analytics, any erosion of competitive advantage could have profound implications for long-term revenue. Beyond competitive forces, Palantir also faces operational and reputational challenges that could influence future performance. A recent assessment from the United States Army highlighted serious cybersecurity vulnerabilities in a battlefield communications valuation system developed by Palantir in partnership with the defense-focused company Anduril Industries. When companies working in national defense encounter cybersecurity concerns, the consequences can extend far beyond a single product. Such issues may strain relationships with government buyers, affect the renewal of agreements, raise questions about system reliability, and increase regulatory scrutiny. Reputational challenges often linger long after the technical issue is addressed, making them a meaningful risk to consider. Taking these multiple threads together, Palantir Technologies stands as one of the more intriguing stocks in the rapidly expanding artificial intelligence ecosystem. The company benefits from a rare blend of government trust, advanced software capabilities, and accelerating commercial adoption. At the same time, its towering valuation, intense competitive landscape, and operational vulnerabilities introduce real hazards for investors. That mix of exceptional opportunity and meaningful risk makes Palantir a stock that invites careful thought rather than impulsive decisions. For investors weighing potential long-term rewards against near-term uncertainties, the company serves as a vivid reminder that transformative technology does not eliminate traditional investment risks but instead amplifies them. Studying Palantir through that lens reveals a company with massive potential whose trajectory will depend heavily on execution, innovation, and its ability to navigate a fast-shifting technological environment. Essentially, Palantir Technologies has surged by more than 119% this year thanks to momentum from its artificial intelligence platform and growing government agreements, but the stock also fell by 12.6% in November as fears of an artificial intelligence bubble cooled enthusiasm. The company stands at the crossroads of high potential and substantial risk, supported by strong year-over-year revenue growth, expanding adoption across government and commercial sectors, and significant financial strength that includes increased revenue expectations for the year 2025. Yet concerns remain due to its extremely high valuation of 387 times earnings, intensifying competition in the artificial intelligence and data analytics landscape, and cybersecurity vulnerabilities that could damage its reputation with government agencies. These mixed factors leave Palantir as a company with impressive long-term possibilities, but meaningful uncertainties that investors must weigh carefully based on their personal risk tolerance and investment timeline. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.